Hello guys. Last week, in the whole market, we saw a very big sell-off. Okay, some indexes begin with the beginning of the week, and some they begin with Thursday and Friday. Okay, so why is that? Why we see all the market go down at once? Okay, I'm not speaking here about conspiracy or about something that political or no. In business, especially in the stock market, people they work in secret. Okay, it means what they do, who cares? Okay, the Security Exchange Commission, okay, they don't care a lot about whether there is a sell-off or there is short selling, because it's something that it is part of the game. Okay, people who push the stock market up, they, like the mutual funds, they buy a lot. They buy almost all the stock market. Okay, because they are the market. Now when they buy all the market, you see for years the market is going up and up. See, for example, the Dow Jones. I made a video I think 2 years ago when it was 12,000. Now it is 16,000, and then it goes a little bit for this week. Okay, you see, something is very simple. You see it. You see that there is something is going on. A lot of buy. You see some stocks roar. A lot of profits for a lot of people. Day traders, swing traders, position traders. All these 2 or 3 years or 4 years, it's a big feast for all the people. And you find some people losing money. I don't know why do these people lose money. Okay, because most of the people who lose money, there are two kinds that I recognize. Maybe you know more. Maybe you are a kind that it is unique, so I don't know. One kind is the people who don't know how to trade or how to invest. This is typical. It means most of the people they lost money because they don't know how to trade. They have not clear idea about how the game is going on, how the game is. They enter a game but they don't know how to play it, so they lose money. Second people are the worst. Second people are people who read a lot about theory and they can't practice what they have learned, and they are stubborn. What does it mean, stubborn? It means they have knowledge but they don't make money and they lose money, which is worse when you know a lot of things in the market and you are losing money. It is worse than a beginner who doesn't know how to trade. He has a flu idea about what is it stock market, what is it trading. He has no clear idea about the market. Who are the players of the market? He doesn't know nothing. He just begin to trade. Some people they told him, oh, you can go to stock market and you can make money. So he has some money. He come to the stock market and he begin to trade, and he see that trading and investing, it is so hard. Because whenever he buys a stock, it goes down. So he doesn't know, he doesn't understand excuse me, why all the stocks that he buys go down, and when he see the charts of some other stocks that he has never bought, they are going up. So what's the problem? Okay, so in the market, as I told you, mutual funds are buying always, but some This happens almost once in a year. What they do, almost all the mutual fund, they begin to sell off all the almost all the stock market. Okay, I have no idea what is the reason. Some of the reason is that some mutual funds, they have a big profit in a lot of stocks, so they want to cash in, okay, to show to their superior managers that they manage well the fund, the mutual funds managers. They show, because they get a very big commission, okay, when they see the fund is growing up and up and up, and a lot of people, they buy this fund because it's going up and up and up. That's why they are making too much money, or they make money. Now, second force, a big force, those are the day traders, short sellers. They are always in the market and they begin the day with shorting. If the stock is weak, they will kill it. And as you know, they will kill it. They take too much money. Now, day traders always wait for this big opportunity. Like these two days, like Thursday and Friday, believe me, a lot of mutual funds, a lot of big traders, billions of dollars have been gained by some people, managers, big traders, short sellers. Okay? Who are the losers? The losers, all the people who hold on the stocks. They don't put stop loss to get small loss, and they get out if they have made a profit. For example, let's say you buy a stock at $30, it goes to $50, you make $20. But always put your stop loss near the price that it is the last trade. For example, maybe let's say it's 50. Now, when we have a big sell-off and when the stocks are going down, if you put stop loss like 48, you lose only $200 for each 100 shares that you buy. Okay? But suppose that you don't put stop loss. What will happen to you? And you buy 200 shares. If in that day you lose 10 points by 2, it means you lose $20 for each share you buy. It's a lot. Even if you make a profit, but it is not good because you give almost half of the profit to the guys. Instead of giving them just little, you give them half of your profit. Because your profit is maybe $40 for each share, you give them $20. So you give them free money. And in the market, these short sellers, they like free money. Okay? They don't beg you because you give them by yourself. You give them a gift. Why they don't take a gift in Christmas time? Okay? Because you don't care about your money. You give it for the people who have money. If I tell you how much you lost, okay, last year, how much you lost? If you say to me, for example, I lost $1,000, $2,000, $5,000, I say, could you imagine if you give this 5,000 to some poor, some needy people, they give clothing, food, participate in charity things? It's better for you because at least some poor and needy will get these gifts from you, and it's a very good thing. It's a good deed. But you instead, those who are rich, you give them your money for free, and they don't say thank you. In the market, you know, when you lose money, the broker doesn't send you a message. They say thank you for giving us your money or for giving to other traders money. Okay, they say nothing, which is terrible. So last week, it's the beginning of a big sell-off, short selling. I think it will continue next week or the other week, depends. Some stocks, they will go up again because some people, they like them, so they will buy them again. And some stock, they get hit and they lose a lot of money. And if you have one of those stocks that go down for deep and they lose 20%, 30%, or 50% of the price of the stock, you will get hit so hard if you don't put stop loss. Okay? Now we will see next week or the other week, and we'll see if the market is going up again. It shouldn't be all the market, but it should be a lot of stocks that are appreciated by traders or by other mutual funds, because you see some mutual fund, they sell some stocks, but these companies are good, so other mutual funds, they buy them at 30, at 40, at 50, and this 30 or 40, 50, maybe next year they go to 60, 70, 80, 90. Okay? So what happened in the market, it happens only once a year or twice a year. It didn't happen like this. It is not a correction. This is a sell-off. Okay? A correction, it means when the stock is going up, it goes down for a little bit, not that much, and this is called correction. Because people who buy, like swing traders, they sell. Position trader, when they buy for 1 month or two, they sell. When they sell, you see one day or two the stock go down because they sold their holdings, because they think that the stock will not go up again, or they have a target, price target, and that's it. So be careful for the next weeks, because maybe the market will go down again. If you have bought my book, you have the chart, and you should go to a summary of the market, and I made a video for you guys to see how the market indexes are doing, like Dow Jones, like Russell 2000, like Nasdaq 100. You will see how, it's just a summary. But if you want it detailed, in the chart you find it detailed, but all are in red, which is fascinating. All are in red. So what does it mean that all are in red? How come that all the mutual funds, they sell in one day? Because they do business together. Okay, they do business. Some they are friends. They do parties at night. Say they okay. What do you think we do tomorrow? Oh, okay. We hit the market. Okay? It's not one or two. You find maybe 500 managers or something. No, they shouldn't do that in terms of ethics of stock market, and because there will be like investigations. But you know, who cares? Who cares about this? Because the government, either you make money, either you lose money. The government is making money. Always there is tax. Because if you lose, the people who win, they pay the tax for the money that is lost. Okay? They pay the tax. So the government is always okay with what happens in the market. It goes down, it goes up. It's always making money. Because when it goes down, short sellers, they have profit. So the government, that comes to them, okay, give us tax. The people who, mutual funds who sell their stocks, big sell-off, the government comes to them, okay, give us the tax. So the government is always good with the stock going up or going down. So difference. So who loses? Most of the time is the beginners, is what we call the public. The public is most of the people who invest or trade, but they don't know how to invest or how to trade. So they lose money. Okay? Hope this lesson you have understood something, that sometimes things happen and you should be always prepared. You don't get surprised when, for example, yesterday or the other day, okay, you have some stocks that if you put a stop loss, of course, you exit the trade because your stop loss gets hit. Okay, that's good. It's better than to stay more and to lose more, because if you lose more next time or next month or the other month, you can't trade because you lose too much money and you have no money to trade with. Okay, so thank you very much for watching this video. If you have any questions, just ask as usual.